Welcome back to another segment of Property Smart. Hi, I'm Charles.
I'm Joy. Today we shall discuss using property to build our retirement egg nest.
Yes, traditionally, we are taught in order to save, you should place your money in the bank. And this still holds true, but only issue is inflation. It has eroded our monetary value.
Assuming with a 3% inflation rate, $100 last year will only be worth $97 this year. All this is because of inflation has pushed all goods and services to become more expensive over a year.
Over time, as material costs, labor costs, services like architect design and other consultants needed to put together a development, etc. The construction next year will naturally be more expensive than this year. If everything else remains the same, with appreciation in property value, it helps to defray inflation.
Imagine the employees who are part of the architectural design team with no salary increment year on year. Many would quit for sure because everything else would be costlier.
You are spot on. That is why finding a good and viable form of saving that will not easily devalue our hard-earned money is important, especially our property portfolio. If managed well, can provide us the fund to maintain our current lifestyle in our later years.
Real estate has historically been a reliable investment, especially in Singapore, with the potential to build equity and create a tangible asset that can appreciate over time. Plus, you can also generate income through renting or leasing the property, which can be a great source of passive income.
As the value of properties tend to rise with inflation, owning property can help us preserve our purchasing power over the long run. We should not solely depend on stock market or traditional investment options, which can be subjected to volatility. Let me illustrate a little. Take a 5 years timeline, for example. Looking at the three market segments, orange line being HDB, light blue line being private residential, and dark blue the landed. This is an average growth of three market segments over 5 years. HDB has a growth of 28%, private residential 37%, landed 44%. If you look at the ROI, you get HDB over 5 years at 5.6%, private residential 7.4%, and landed 8.8%. Wouldn't this be the type of saving returns we want? Further, if we explore returns on equity, which are the total amount you would have invested over 5 years, the saving returns just shot up even more. HDB should not be used as an investment choice because it's meant primarily for own stay. But the private residential returns work out to be 15.1% and landed is even higher at 18%. This is the saving we all are eyeing at.
Take two sets of recent transactions to help you see the power of using property as a form of saving to grow your capital principal. Park Rivera. You can see the significant gains over a period of 5 years. Next, J-Scapes. The gains are over a shorter period of time, but no less eye-popping.
Traditional saving cannot offer us these returns.
Absolutely. Diversification is the key managing risk and having a well-rounded investment strategy. Property ownership can add stability and balance to your overall investment portfolio.
I agree. Of course, there are risks associated with property ownership, such as property value fluctuation, maintenance costs, potential mortgage obligation. But with proper research, due diligence, and professional advice, those risks can be managed effectively.
That's right. It's important to carefully consider the location, condition, and potential for appreciation of the property before making a decision. Also, it's crucial to have a contingency plan for unexpected expenses.
Absolutely. Property ownership requires careful planning and management. But in the long run, it can be a wise form of saving that offers both financial benefits and a sense of security.
I couldn't agree more, Charles.
But before we go hunting for property, there are some factors for us to consider.
Location ma. The price and price, isn't it so?
Yes, rightly so. But there are other variables that can have a big impact on our profit margin when we sell in future as well. Shall we share?
Of course lah, good thing must always share. I can't wait to share more in our next session. I'm Joy.
And I'm Charles. Stay tuned to our next Property Smart segment. Do remember to like and subscribe to our channel.